Welcome back, everyone. I hope you're having an amazing day. If you're holding DEX Protocol or thinking about buying after this massive crash, don't make any decision just yet. Today, we're going to uncover what really caused this huge price collapse, why smart money is closely watching this token, and whether DEX could stage a massive comeback or continue falling even lower. Over the past few weeks, DEX Protocol has experienced one of the biggest crashes in its history. The token has lost nearly 88% of its value in a very short period, leaving thousands of investors shocked. Whenever a cryptocurrency falls this hard, social media quickly fills with two different opinions. One group says the project is completely finished, while the other believes this is the opportunity of a lifetime. But the truth usually lies somewhere in the middle, and that's exactly what we're going to analyze today. Before talking about the price, let's understand what DEX Protocol actually does. Unlike meme coins that depend purely on hype, DEX was created to provide infrastructure for decentralized autonomous organizations, also known as DAOs. These organizations use blockchain technology to manage governance, voting, and treasury funds without relying on a central authority. On paper, this is a strong use case because decentralized governance continues to grow across the crypto industry. However, having a good idea doesn't automatically guarantee success. One of the biggest concerns surrounding DEX is its development activity. The project's public GitHub repository has shown very little meaningful activity over the last 2 years. In an industry where blockchain technology evolves almost every month and artificial intelligence is making software development faster than ever, investors naturally expect continuous updates and innovation. When development slows down, confidence often begins to disappear, and that's one reason why many traders became cautious about DEX. Another reason many investors originally supported DEX was its tokenomics. The project has relatively low yearly token inflation, with only a small percentage of new tokens entering circulation each year. Normally, low inflation is considered positive because fewer new coins entering the market can reduce selling pressure. Unfortunately, tokenomics alone cannot keep a project's price rising if investors lose confidence. At one point, DEX reached a market capitalization of nearly $4.7 billion. Today, that valuation has fallen to roughly $200 million, proving that even strong tokenomics cannot protect a project during a prolonged bear trend. Now let's look at what on-chain data is telling us. The number of large wallets holding significant amounts of DEX has remained relatively stable instead of increasing aggressively. During major market bottoms, smart money often accumulates while retail investors panic. At the moment, we haven't seen strong evidence of massive whale accumulation. That doesn't necessarily mean whales won't buy later, but it does suggest that many large investors are still waiting for stronger confirmation before entering the market. The derivatives market provides another important clue. Spot trading volume remains relatively small compared to perpetual futures trading volume. In simple terms, most price movement is currently driven by leveraged traders rather than investors buying the actual token. When leverage dominates the market, volatility increases dramatically. This is exactly why DEX has experienced such violent price swings over the past several weeks. One of the most important indicators traders are watching right now is the funding rate. After the recent collapse, most long positions were liquidated, leaving the majority of traders positioned on the short side. As a result, funding rates have become deeply negative. Many beginner traders assume that negative funding automatically means a price reversal is coming. But historically, extremely negative funding rates often remain negative while prices continue falling. Market makers usually become more interested once funding begins returning toward normal levels, because that often signals improving market conditions. Open interest also tells an interesting story. Before the crash, open interest was close to $300 million. Following the sell-off, it dropped dramatically to around $40 million. This means a huge amount of leveraged money has already left the market. Recently, however, open interest has stopped declining even though prices remain weak. This suggests some traders are beginning to build new positions. Whether those traders are experienced investors or simply aggressive speculators remains uncertain, so patience is still extremely important. The biggest question everyone is asking is simple. Can DEX recover? The answer is yes, but only if several important conditions begin improving. Development activity needs to increase, investor confidence must return, funding rates should normalize, and stronger buying activity needs to appear on both the spot and derivatives markets. If those signals begin appearing together, the probability of a sustained recovery becomes much higher. On the other hand, investors should also remember that many altcoins continue falling long after they appear cheap. Buying simply because a token has crashed is rarely a successful strategy. Professional traders usually wait for confirmation before taking larger positions. Confirmation reduces risk and increases the probability of entering during the early stages of a genuine recovery instead of catching a falling knife.
So, what's the conclusion? DEX Protocol still has an interesting long-term use case, but the market is clearly waiting for stronger evidence before trusting the project again. Right now, patience may be more valuable than emotion. Instead of rushing into the market, continue monitoring developer activity, whale accumulation, funding rates, and overall market sentiment. Those indicators will provide much better clues about the next major move than price alone. What do you think about DEX Protocol? Is this one of the best buying opportunities of the year, or do you believe the token could fall even further? Let me know your thoughts in the comments below. If you enjoyed today's analysis, don't forget to like this video, subscribe to the channel, and turn on notifications so you never miss our latest crypto updates. Thank you so much for watching, and I'll see you in the next video.